What's good, YouTube game? So it's Monday, the day after Resurrection Day. Boom. Last night I made a good 4.6 to 4.7K. Grateful for that. So today I'm just really just teaching. It's not gonna really be too much of real deal content today. I might just do strictly education today. I do got a student I'm about to teach right now. And yeah, I lied. I definitely gonna get my car back because y'all. I told y'all I would get my car serviced the other day. So I had my check engine light come on like immediately after. I could hear my fucking supercharger, not supercharger, my turbos and my cooler inside of my car. So yeah. So now we had to get that done. But I'm about to get my students taught today, and after that, I'm gonna have the education video. Is gonna be like a more deep understanding of price action, deep understanding of the numbers and how I look at the market. So that's how we're gonna do it today. Besides that, I'm chilling. You hear me? I do got me a fruit bowl. You know what I'm saying? I get one of these every day. I love me a little fruit bowl. You hear me? So yeah, I'm gonna holler at you guys. You might just see me on the on the screen next. So yeah, I'm gonna holler. Wow. While I'm currently waiting on my student, I just want to give you guys, the psychology. I always tell my students to not worry about the money because the money is going to come when the strategy presents itself. Don't get me wrong, but always trust the strategy more than the money. And if you do feel like the money is putting a toll on your mind, all that's telling you is you are over leveraging and your mind cannot deal with that type of money. So all you have to do is lower down your lot sizes. Oh, if you trade, I'll say lot sizes. I'm not on forex anymore. You're on futures. Lower down your contracts. If you're on YM, the one contract too much for you, go on MYM. Do about 2, 3 contracts. That means 50 cents per point. If you're on NQ, I tell people all the time, do not trade NQ, especially if you do not have money into your account, because NQ moves at $20 a point. So you're gonna lose it faster than you know. So I recommend if you're trading MNQ, I say MNQ. If you're trading, want to trade Nasdaq, trade MNQ. 5 contracts. That's basically like 2 contracts uh on YM, or it's half of the contracts on NQ. Or start off with how I do it is I'll put 1 contract on, no matter what it is, 1 or 2. I probably do 2 or 3 when it comes to MNQ. I probably do 1 contract. And once I see it going my way, then I add more. You add more. You add to your winners and not to your losers. Do not put the maximum contract that you want on your account on the first trade. Like, do not do that because you could do that. As soon as you get in, it can go immediately out your favor, or because something could spike, some news could happen, and then you could lose the money you want to lose in a day like that. So I recommend start off with 1 contract. You start off with 1 contract. Once you see it's going in your favor about 5, 10 points, 20 points, or matter of fact, wait till a candle close. If you trade 5 minutes, wait till the 5 minute candle close. If you trade 15 minutes, wait till the 15 minute candle close. If you trade 30 minutes, wait till the 30 minute candle close, and so on and so on. Wait till it close, and then you enter more, so you have more confirmation that it is going your way. So yeah, don't care about the money, care about the strategy. Like me, like I say, if I'm getting in at, y'all know I trade off of numbers. So let's say I get in at around 46,500. I don't want it to go no less than 46,400. No less. Probably say 46,450, depending on how much I'm risking at that moment. But I would say at least 100 points minimum. And I mean to break it, not it's going down and hit the 400, because the market is made to liquidate people. It is made for people to lose money before it goes your way. So I mean, if it go down there and then it breaks through and holds strong, then yeah, you can get out. But if it goes down there and tap it, then it start going back your way, then don't get out. That's just my advice. I don't use stop loss like that because I feel like a stop loss is made to make people lose. You should know, you should have a mental stop loss in your head already, especially if you're watching the charts. If you're watching the charts, you won't have a mental stop loss. I have a mental stop loss. So I know what the market does. How many times I put a stop loss 50 points below or 100 points below and it wicked it and it went my way? You know why? Because people teach that on YouTube. So you think If they see all this on YouTube, and if you are a person who runs the market, right, and every YouTuber says, "Oh well, do 50 points, do 100 points," and it goes exactly to that point, and then goes their way. Come on, it's manipulation. So that's why I don't use stop loss. But if I'm going to sleep or something, I'm gonna put a stop loss. If I'm busy, I'm gonna put a stop loss. It's the only way I'll put it if I'm busy. But if I'm not busy and I'm kind of watching it, I won't say I'm staring at it like this, like a hawk, like this on that building, like that. Nah. So I'm watching it as in I'm doing something. I might put my phone out, or I have an alert on my phone for it to hit a certain level. If that alert hit that level, I would then look at it because I don't want to sit on that and get messed up in the mind, wondering like, oh man, this trade gonna hit or not. Nah, we're not about to worry about that. I have the idea already, and most times you should know automatically when your trade is going out of your favor. Like if I get in at 46,500, right, and it's supposed to be going up in my opinion, and they do a crazy wick down, it starts to go down. That's just showing me it's not going my way. So it's no point of me to hold that trade. So you should know immediately when your trade is out of your favor. But it's gonna take some time, especially if you're new. It's gonna take some time for you to know when your trade is really going out of your favor because the market is made off of manipulation. It manipulated twice last night actually. It went from 500 to matter of fact, since we all right here. It went to 500. So you broke through 500, that black line. Then it went up. The blue line is 618. It's the fib number. Then the red line is 750. So it went from 500 to 750. Then 750 back down to 500. Then above went to 750 again. Came back to the 618, the blue line, and now it went to the 900 number. And I'm gonna get more in detail of, I told y'all to do like 47,000. I told y'all to do like, uh 46,000, 46,250, 46,000 750, and 47,000. That's just the main part of psychological numbers. But it also can stop at other whole numbers as such as 46,900, 46,800. Well, yeah, because it's like a zone, it's a range. But that the main ones are the quarters, in my opinion. It's the main ones, but it can't stop that. It's like the fib numbers. It can also stop at the fib numbers. It can stop at 236. It can stop at 382. It can stop at 500. It can stop at 618. It can stop at 782. You just gotta have discernment. And when they hit these levels, don't hop. Like you could be aggressive and hop as soon as they hit it if you just have that much confidence. But be worried of either a wick out or it is really just going out of your favor. You have the perfect entry for a loss. You do not want to have a perfect entry for a loss. I always have a perfect entry for. If I lose, it's going to be a perfect entry for a loss because it's in a perfect spot to make a major move. So I try not to. I try to let the market show me it's going my way first, so I do not have to worry about that. But if I do get aggressive, sometimes it happens. So I have to be in drawdown maybe a night. Sometimes drawdown will be a while. I'm not gonna be. I ain't gonna lie. Sometimes drawdown will be a while. Probably be some hours until I get back to profit. But it's okay. As long as I know what I want to lose in my account, that's all that matters. I have a high tolerance for my stop loss. Like some people, like I could see about $2,000, 3,000 and not be like, oh man, I gotta get out right now because I'm losing. Nah, because I don't give a fuck. I always tell y'all, fuck this money. This money is just to get things that I don't need and for my freedom. I want to be free. I am free. God bless me to be free. So I am free. I ain't gonna say I'm not free. I am free. I haven't worked in a while. I am free. All I gotta do is to figure out what I want to do with my free time. Now I say I'm gonna be a kid again. I'm gonna be outside hiking, rock climbing, just random stuff. Like I be clubbing and stuff like that. I'm new to that, so I have been on the club scene. But I do need to get out more during the day and do things for myself to better myself. So that's all I'm talking about right now. Yeah, bye. So what's good, gang? So today, we're going deep into price action, deeper into confluences, and deeper into the EMAs. Just to have a little more, like I told you guys about the quarters, the 500 to 750. I told y'all about the thousands. I also told you about the fib levels. So I'm gonna do a deeper dive into it of what I would look for to get in. And yeah, let's get to it. And what's crazy is last night I got a trade at 46,500 to buy up to 750. It went to 800. I got out. Got like a 4.6 to 4.7k. Uh, I'm like, bro, my mind is so fried right now. I don't know why, but I had 4.6K profit today, and I had the 7K because I had my goal to 47,000 a day, but the market was very choppy due to PMI and they have CPI Friday and CPI Thursday, and also got FOMC Wednesday. So I'm knowing the market gonna kind of be choppy and kind of slow until those things play out. So right now, let's just really like kind of dive into it. So last night I happened to trade at 46,500, which was actually right, this right here. This is what I hopped in. This is basically my entry. Was it 500 on the head? It probably was like 46,514, 520, but as long as it's within that range and it's going up from that 500, that all that matters. So basically, I got in at 500 and got the 750. So what I seen was that first of all, the market had gapped. So majority of the times, if the market gaps, 9 times out of 10 it will close. When it will close, we don't know. Sometimes it'll be immediately, within the near future. Sometimes it'll be a couple days, but the gap will eventually close, especially if it's towards the upside, because the markets are always bullish. Even though we're in a bear market right now, the markets are still bullish overall. So when I'm into these markets, if I'm at a price of 46,500 and I'm bullish, I'm buying until it hits the next zone. So if I'm buying here, I'm looking for it to either go here, or if I'm very confident in my trade, I will hold it until maybe it hit here. Till, well, why is that right now? I'm gonna put it right here. Till it hit here. But me personally, I don't like to wait for trades that long no more. I mean, it's no point. 200 points in a day is awesome. 100 points in a day is awesome. A lot of traders are not averaging even 60 points in a day. A lot of them don't average 100 points. So 200 points is awesome. 500 points is great. And anything above that is immaculate. You know what I'm saying? So you have to understand that one contract on here from 250 points is $1,250. So the more you add the contracts, so 1 times 2, 25. Then 3750, 5,000, and so on and so on, the amount of contracts you add. So today, I'm knowing that the market will. I can get my damn charger right quick. Yeah, I'm knowing that the market is about to close around 47,000. So tomorrow, I'm just trying to see like, is it is it going to go to above 47,000, or would it go below 47,000? But I'm very bullish of the market for the week because last week, like I told y'all, I say like I told y'all, I haven't talked to y'all in a couple of days. So I've been talking to my students all day. So like I told them, last week was very bullish. So this week I am only looking for buys. Anything that go against a buy is a high risk trade, and you're basically kind of asking to lose unless you get in at a certain level and it goes down. Like I'm gonna say like a counter chin trade. If you got experience in the market, it's gonna be different. But if you do not have experience in the market, do not go against the major trend of the daily and the weekly. Do not even the month, especially the month. That's even the money, especially the monthly. Do not go against it. Now monthly, you might can go against that sometimes because the week and the day probably show you bearish. But if the week is showing me a strong bullish movement, I am trying to be with the bulls until we can bull no more. And I'm really expecting the market to go to 47,500 this week and maybe surpass that. That's what I'm looking for. But this is basically the content trade that I would take if I am counter trending. Even though I did take the bull last night, I will get in at the 750 area because one, it rejected this area one time. That's one rejection at 750, two rejection at 750, another rejection at 750. So this will be a real. This is what support resistance actually is. Support resistance is not it going because you see it going bouncing up and down in one spot. That it's support resistance. No, it's just consolidation. Support resistance between two major numbers, two major zones like this. You see how it went from 47,000, made way down to 46,000. Then went up to 47,000, then it made way down to 46,000. It broke through. It broke through, came down to this 45,000, and made way back up to the 46,000. Then once it break the 46,000, it went up to 47,000. So that is support and resistance to me. But back into this counter trend. If we are showing bullish, once this market changed character, which it changed character right here, it changed character once it went below, then it went above here. That means we are now in a bullish state of trading. We are in a bullish state of trading. It made a double bottom. It broke a lower high, and we are going strong towards a side. So now it changed the character to back to the bulls, and that's how last week the candles was so huge because we are now in a bull way. Really and truly started downhill for the bull week because we went up like a thousand points, no, 2,000 points actually. So yeah, so that shows that we are changing character, and the only way I would get into this is if I would have sold right here. But like I said, I'm bull. I bought in right here, then I got in again. I bought in and rolled in to 800, and it gave me a 40, a 40. I'm gonna say 46, cause matter of fact, I have a screenshot. I mean, you probably can't see, 'cause I got a small camera on now, but I do have screenshots on my Instagram. You know, my real Instagram, which is Smiley True. I also have my other Instagram for trading, which is with all screens. I do need to start posting more on that, and I probably will have some content on that today. But yeah, I did post the proof of me making the money because once I screenshot, I am taking it. I tell people all the time, if you screenshot it, take it because in the next hour or 15 minutes or whatever, it will burn you. I'm telling you it will burn you because imagine this trade. Like I told you, I got this trade right here. See what it did? It went to 750 exactly. It went exactly back to 46,500. So a normal trader, once they would have seen they hit that 750 the screenshot, oh yeah, it's gonna go some more. No, don't think that. If it's showing it's not going no more, hey, get out. Once you screenshot, hey, get out. Fuck that. We ain't giving no money back. And once you get back to that 500 level, you know what you do? You buy it again. And the only way I will get out is if it hit the 46,386 or if it hit the full 46,400. I would say 400 because that's 100 points away from 46,500, but I do know 48,386 is a fib number, so it could go there and then go its way. As you see right here, the market opened at 5 o'clock. It's a 5 o'clock candle. And they went to 386 and went from 386 and they kept on going up ever since. And that's a fib number. I don't have the Fibonacci on right now because I don't like to have all those colorful lines on my screen. It honestly make my brain just go all over the place. So I like to have my stuff in certain places where I'm at in the market. But let's get into more confluences of ways I would get in. Like for tomorrow, this is what I'm looking for. I'm either looking for something like this. For it to break through, come back, break through, and go above here, and maybe retest this and go up, and so on and so on. I can't. Matter of fact, let me move it up so we can do a better representation of what I'm gonna be looking for. You can either go up, do this, hit that, go down, uh, 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 and so on and so on. Or it could do something like this. Boom, 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 boom. Because we are in a CPI, PMI, and FOMC week. If you don't know, if you haven't been trading for a minute, CPI, FOMC week is like one of the most I wouldn't say choppy, yeah, choppy slash volatile weeks. One time it'll be going up fast, then they go down fast. Then one time it go right up back fast. So don't Do not be chasing trades during this week because it is CPI week. If you see a price that you want to get in and you bought in, hey, ride it. But if you don't see a profit you like, or if you do see a profit you like, take it because it could potentially go back down fast as hell. Look, I'm still on this line. Anyway, like for example, went from 500 to 250. It took from 7 o'clock to 9:15. Then from 9:30 to 8:15, it went down the same amount of points just that fast. And most people, when they see it went down this fast, they are going to get out. It's like, oh man, it's not going to do what I want. Like, it's not going to do what I want. I thought it was going to go to 47,000. It's going to keep going down. But now, as soon as you get out, and that's why this week happens, as soon as the people get out right here, everybody getting out because they're getting scared, it's going to go up and go the way that we've been wanting to go. And look how late this day took. Like this 4 hour, it took this 1 o'clock 4 hour at 1 o'clock to hit 47,000. Me, I'm not looking for trades at that time. Honestly, I'm not looking at the. I don't want to really look at the market at that time because it's no point. At that point in time, I want to be living my life. Or since I am teaching now, I just start teaching. I will probably be most likely teaching a student, but I'm trying to be in. I most likely be out before fucking 8:30 bell. Honestly, like on some real G shit. I'll be out before bell. Be out before 7. I'll be paid the night before unless I see it going my way in a nice fashion. Like, let me see. Let me give you an example. See, like at 8 o'clock Wednesday last week, it went down. I probably hold that night, but it got. But at 100, it stopped. But that's all right. So that's at 6 o'clock that morning, 7 o'clock that morning. You'll be paid. You'll be paid from 900, from 800 with one contract that is 4K drop in one move. It's the only way I'll hold something like that if it's giving me a strong momentum. But if it's not, nah, because most times if you find a trade in Asian or London, 9 times out of 10 New York is going to reverse that trade. It's going to reverse it, maybe reverse it exactly to your entry, maybe a little bit lower, and then potentially get in your way for the big players to get in. So that's why I like to get out way before New York, way before 7 o'clock, so it does not mess me up. Now, confluences. Let's get deep into it. Matter of fact, let's get into the numbers before the confluences. So, I did tell you guys about the fib numbers in the 250, 750, 500, and 1,000s. So, if you don't have to directly get in at 750, you don't have to directly get in at 500 or any number that I said. You don't have to directly get into that. Because let's say it does say 750, you get in aggressive. And then as soon as you get in, I say we selling. As soon as you get in, matter of fact, forget the selling. Because I bought it last night. So let's say I bought it in at 46,500. I bought it in that, but it's going up. And I see that it's trying to break the 46,750. Now I got out. Now, some traders, when they see stuff like this, and see it's going up in a good fashion, they might hop in again. Hop in again, over risk, and then as soon as you do that, it's going to go down. We're not trying to do that. So if we are buying and it hits that level, we're going to wait. We have to wait at 750 because we just wait till it passes. Wait till it breaks and holds 750, and even to be more patient, wait until it breaks 800 because 800 is honestly a way better level than 750. It's just the 800. Hold on, somebody text me, bro. I ain't talking about nothing. So yeah, at the 800, as you can see right here, it came up here to the 800. As I said, did not break and it went down again, maybe to the 618. Matter of fact, I don't like to have a lot of lines, so I'm gonna move to 750. I always have don't please, and that's another thing. Please don't have all these lines on your screen. Make sure you have enough lines to make you see what is going on in that moment. You don't need 50,000 lines because you're gonna have so many lines. You're gonna be getting in and out, and you're gonna get smoked. So have your two major lines, which is the thousands, and have your midline. Now, when you below the 500, you do the 250 or the 236 and the 382. And if you're above the 500, you move those lines above the 500 and go to the 618, the 750, or 786. Because 750, 786 is the same thing. Same thing with 250. 250 and 236. It most likely going to hit 236 and then go above, like 750. It might hit 750, but it could go to 786 and then go down, or it could break through 786 depending on where we at. So right here, as you can, like I said, what that noise? Like here, what I said, it went to the 800, but it did not break. So you'll have to wait until it shows you that it is breaking that area. It's like right here. It showed bullish momentum past the 46,800. So once it break through that with momentum, then you hop in and ride it to the next zone. The next zone, which is 47,000. And from 46,800 to 47,000 is still a 200-point gain. One contract that is $1,000 on YM. And if you're on NASDAQ, I don't trade NQ unless I'm really just wanna. I wanna trade NQ if I'm normal put close to 10 contracts on MNQ. It's the only way. Other than that, normally I'm trading probably 1 to 5 contracts on MNQ, but I don't really trade it as much. So yeah, it doesn't really matter kind of right now because I don't really trade it as much no more. Because YM and NASDAQ move the same, but YM moves a lot faster to me. It moves like, let's say if NASDAQ moves like 200-300 points, YM probably moving about 400, 500, 600 points. So that's the difference. Only reason why NASDAQ probably bring in more money is because NQ is $20 a point. Now, if Dow Jones was $20 a point, bruh, it will be the biggest money maker known to man, like real talk. But I mean, I trade it anyway. I trade full contracts on here, so it's the same thing. I just rather put the full contracts on YM, and then be just going to NQ because I really don't. It moved too slow for one. Like I don't have time for that. But let's get back into the numbers. I keep going off track. I like to give too much knowledge, and that's kind of it's not a problem, but at the same time it's a problem because sometimes I get off topic. But if we at the 750, you do choose if you're buying, wait till it passes 800 in momentum, and then you get in. If you're selling, you have to get in at 750. Wait till it go past 700. Wait till it go past 700 before you get in. Because as you can see, now that I'm moving it down to 700. Now that I'm moving down to 700. I'm gonna move the 618 line right quick. You see, as you can see, it went straight to 700, and then it bounced off and went above, broke through 800, and then it went to 47,000. So really truly, that was a 300-point move. But like I said, if you want to be more patient, just wait till it passes 750 and wait till it passes 800, and then you get in. And vice versa. If you're looking for a sell, hit the 750, wait till it break through 750, and so that it's breaking through 700, then you get in. You don't want to get in no further than that. No further than that. Because at that point, once it break through there, it's probably going to 618. And if you go to 618, you probably get like a decent drop, you know. But we're not looking for small points. We're looking for 100, 200, 300 points, at least 100 points. Because the most our risk is 100 points. So a 1-to-1 to me is 100 points. Period. 200 points is 2-to-1. 300 points is a 3-to-1. 400 points is a 4-to-1. Now, when it comes to risking your money, I already spoke about it when I was talking to y'all, but let's talk about it right now to make sure y'all have this down pat. If I am getting in, I think I spoke about it on here too, but we're gonna keep talking about that. Matter of fact, if I'm getting in that 46,500 on a buy, the lowest I am going is 46,400. Now I would let it go to 46,386 sometimes, because that is a flip number. It can reject. If they reject right here, down here, if they reject it down here, so it could happen. But sometimes, it could break that 400 and go shoot down to 300, and a split second. So sometimes you just gotta have discernment. That's where it comes to your own discernment. But majority of the time, you should know when your trade is going out of your way. Like if I bought in on this candle right here. So if I bought in at this candle and it stayed above, that means at that point, if it do break 400, we should we shouldn't be in there. Or if you want to be most safe, some people do 50 points. You can have your stop loss around 450. And I don't care how far you is from the 500. There's 50 points from the 500, not from your entry, from the price you thought you was going to get in at. Not from your entry. I'm gonna say that one more time. When the trade is safe, they do 50 point stop loss, 100 point stop loss. Don't think of it when you entered at 425, something like that, because at that point it's not an accurate stop loss. It's not, because if I get in at 425 and I got a 50 point stop loss, that means my stop loss is at 46,475. It's not. No, no. I can easily hit that. Easily. The market could easily touch that. So if you getting in at that area, so I don't care where you at. Before 46,530, your mind is in at I am buying in at 46,500. So anything below 46,450, or if you want to do 100 points, anything below 46,400 is when I'm getting out. That is when you getting out. Period. Point blank. Period. Point blank. And vice versa. If I'm getting in at 750, because even though I say the 800 and the 700, depending on if you're buying or selling, it is still 750. It is still 750. Period. So if I'm at 750, right, and I'm buying, I'm saying, all right, it should be going up from 750 into this area. The lowest I will go is 650. The lowest. Now you could wait to 618, but that's like kind of a you damn near risking 150 points at that point. So I say 650. If you're going from 750, or now I'm kind of retract what I say about the 800 and 700. Now, if you do get in at that 800 and you're buying, I would say anything below that 700, get out. So 100 points regardless. So I'm gonna retract what I said about the 750. But the 500, anything with zeros at the end, like 46,500, 47,000, 46,000, 46,100, 46,200, no more than 100 points. Period. Unless you buy a flip number like 786 or 236. Now we could, or 386, 382. What's 386? 382. Now that's the only way you do. Like, all right, I could waste a little bit more. But other than that, hell no. It don't make no sense. Because if I got in at 700, so 700 to 800 is 100 points. So that means, hey, if you go below the 700, my trade is invalid. That means that the trade is, first of all, that means it's going to break this low. That's the first thing. Second of all, matter of fact, ain't no second of all. That means it broke this low and the price it just came from. So that means it's just not going the way that you thought, and to leave it alone. And that's if you're being patient. That's if you got in at 46,800. You would have no longer than 46,700, because it's just no point. Like, we're not thinking about, oh man, if I lose 300 today or 400 today, 500 today, then I'm gonna get up. No, no, we're not thinking like that. We're thinking like, if I get in that 46,700, I am expecting it to go to 47,000. Or if you're being patient, if I'm getting that 46,800, I should expect it to go to 47,000. So really and truly, anything under that 46,800 and it shows strength that it's going under what you did, it's just showing you that it's not going your way. Or it's just retracing and you got in at late, got in too early. It really depends on what time or how you got into the trade. But that's really what matters. Because up here, it really dropped from the 900, then it went to the 700. So that's why I kind of retracted the statement of the 750 and the 250. So I just say the zeros. Like, if you don't want to do 750 and 250, just do 800 and 700. Or for 250, just do 300 and do 200. So it can be more kind of safe in your way. So let's see, 46,900, and it went down. That's why it's another reason why you should not buy in so late into a trade. Like if it shows a strong bullish move, just wait till it retrace, because it's going to retrace. Sometimes it might go up about 2, 300, 400, 500, 1,000 points, but that is rare. That is extremely rare. Most times, if it go up about 100 to 200 points, it is going to retrace. No bull. No bull. If it goes up at least, I say 200. On YM, I say 200. Now, if we go like 100, if it goes choppy, sometimes it go up and down between the 100 point range. Sometimes, but majority of the time it will go like 200, 250 points, 300 points, and then it will come back down. And I say on the average 250, because that's why I always say 750, because as you can see up here, 750, it touched 750 exactly, then it came back down. So I say 250 minimum, two, minimum 200, but 250. It go 250, then it retrace. Then it go up to the next level, then it retrace. And go up to the next level, then it retrace. So if you go up 200 points from a certain spot, wait. Just wait until it retraces, get to a zone that you like again. Cause I say, for example, last night it went up from 500, went to 750, came back to 500, then went to 750 again, and it went down to 618 or 600, depending on how you put it. Then it went to this 900. Then when it came back to the zone of 750, we are now pushing 250 points to the 47,000. Let's take 900 off. So it went from 750 to just 47,000. Now we're in a stoppage because that is the zone. So you could have been patient. Once it broke through and came back, you bought in here. The best entry you could get once it come back above, and you buy into the 47,000. So always wait until it comes back into a zone, or wait until it breaks through a zone and then uh break and retest. Basically, you want to break and retest. Or me, like I am very aggressive. If I have that mind that is going to go up, like see how it went up here in strong bullish fashion. I just had my mind last night that we are bullish because of the last week and because of the day. So that's how we're gonna do the numbers part. You don't have to get in exactly at the number, but have your stop loss have your stop loss determined off of the major zone, not determined off of your entry. I'm gonna repeat that again. Have your stop loss based off the major zone and not in your entry. Now, if you get in at 600 instead of 500, then hey, have your stop loss at 500. Point blank period. But me personally, if I go 200, 100 points above the area that I wanted to get in, I probably was likely not gonna get in, cause there's no point. There's no point. At that point, I'm just chasing a trade. It could be FOMO. You could be hopping that trade at 600, and go right back down. You lose your 100 points, right back, just that fast. And it might just go back down 100 points on you, just directly at 46,500. As soon as you hop in that 600, it go down to 46,500. As soon as it hit 46,500, it goes to the seventh, back to where you wanted, but you just hopped in too early. So sometimes you can hop in too early. That's why I hop in at certain psychological levels. So another, let's see, another way. So I would say, I was talking about the EMA cross. We're gonna always talk about the EMA cross. Now, if you really, really, really want to be patient, wait on a zone like right here. It's actually a perfect example. Now, if you really, really, really uh, want to be patient, as you can see right here, you see a double bottom at the level of, it's not T11 hit 300. That's how you know it hit 300 one time, but it is a double bottom because technically it looks like a W. So I always tell you, if it look like a W, it's going up. If it's looking like a M, I mean it's going down. So as you can see, you had a double bottom. So even though it did not hit the 250, you can get in at that 300 because like I said, it is basically above the 250 or below the 250, 200. So, or you could wait until it goes to 382, the flip number and breakthrough, or 400. Or if you want really wait, you could wait until this EMA cross, this strong bullish candle on this 15 minute. So that's one confirmation. The strong bullish candle through the 500. Once it broke through that 500, I would buy in. Even though I say don't get in, see now I'm contradicting myself again. That's kind of crazy. And that's how trading is. You're going. It's hard being a teacher because you will contradict yourself a lot in a lot of situations. But if it's showing bullets like that and it breaks through, and you have this crossover, the only reason why I say on this trade is because it has the EMA crossover. But me, most likely I would have been in down here around 300, 350, or 382 to be more safe and put 382. I might would have been in at 382 because 382 is the fib number. So I would have bought in at the 382. Matter of fact, that is the perfect spot to get in at that point anyway. So that's why I also use fib numbers. It's not just the psychological numbers, it's both of them. It's fib numbers and the psychological numbers. So you see the double, one bottom, boom, two bottom. Want to see that W? Let's see, go to 5 minute. 5 minute probably show me a little better. See the EMA cross. See this. You see this one nice bullish candle. Boom. Hop in. Cross. Just hop in. Just hop in. At that point, just hop in. And right here is like 450. So 450. If I'm in at 450, I'm not trying to go under 400. Anything under 400, I'm like nah, like because it already went strong. There's no point in me going under 400 at that point. Or if you want to risk the 100 points, go from three. Well, I say 450. The lowest you'll go is 350. Basically below this low, which is 300. So it's up to you at that point. It's really up to you at that point because that is basically what I look for. Like the M right here, you have an M, and this M either came up to 786, 786 or the 750. I'm gonna say 786. So boom, one, two, you may cross right here. It's at close to what 700. That's a good spot. So you sell and you ride it down into the next zone. That'd have been a quick 200 points. Easy, easy. Over here, multiple rejections at the 500 up here. One rejection, two baby rejections, which made a baby M. You have the EMA cross. You could wait to the EMA cross. Like I said, boom, that'd be the 100 point spot. So it crossed way before the 100 point spot. You could have hopped in and rolled it down from 400 to either 250. You could have rolled it down, or you could have just held it. If you was that confident that it's gonna keep going down to the 46,000, like you always want to have a target into where you want it to hit, winning or losing. And we're not talking about profit, because the profit is just the reward of your strategy. We're talking about from one price to another price, because we are price action traders. If it breaks, if we are getting at the price, we're expecting it to break through a price of 46,400. We want to ride it down into the next zone at 250. As if we don't get it at 46,500. If you're not being aggressive, as if you're being patient. If you're being aggressive at 46,500, shit, that was awesome. Like I said, the next take profit will be 250. Period. That would be the take profit from 500. Now, if you was to be more patient, you probably getting that 450. You probably getting that 400. But just be patient in your trades and let it show you it's going to go your way. It is going to show you every time. It's going to start getting momentum. Maybe get momentum in 5 minutes. Maybe momentum in a 15 minute. But once it starts showing you momentum, and I mean momentum that holds, not momentum that do wicks like this. We're not talking about this. It goes up, spike, and then come down. That's not momentum. It's momentum at that moment, yeah, but it's not momentum. You're talking about momentum as in, like, yeah, this candle went down, then it went down, then now we going rolling. Or right here, Candle saw momentum, strong candle, and it kept going up. Boom, boom. It's like how we were just looking at over here. Candle showing momentum to the downside, you get in. So once you see a nice solid candle, depending on what time frame you're looking in, then you hop in if you want to be more on the patient side and not have to really worry about. And once it show you momentum, you just put your stop loss either below the lowest spot, or if you say you get in at 400, well, that would be the lowest spot over here, which is 300. Or if you are getting in at around a major zone like 45,500, you know, sub blase blase, like say you at 525, 536. Do not have your stop loss at 424, 425. Have it at 400. That's the price that it potentially is going to play around. It's not going to play around 45,425. It's not going to play around 45,446. It's going to play around whole numbers, because we don't. Who going to count? If you're counting money, you're going to count. You're not going to count 8, 16, 34, blah, blah, blah. You're going to count $100, $200, $300, $400, $500, $600, $700, $800, $1,000. Then after that $1,000, $100, $200, you know, blah, blah, blah. That's how you're going to count. Or, that's why I got the midpoint, it could be 50, 100, 150, 200, 100, 250, 300, blah, blah, blah. So think about this as counting money or losing money. But we have the luxury to buy and sell. So when you count the money, we have 45,400. Like, man, we're gonna count 45,500. That's 1 and 1. 45,600. That's 1 and 2. 45,700. That's a 1, 2, 3. Now, if we selling, we're like, man, all right, it's gonna drop. It's gonna drop. Since we're selling over here, we're gonna look at over here. 47,000. Thing's gonna drop. Once it go down, get in. The highest we let it go is 47,100. If we selling, so I mean if we go 47,100 and it breaks through, we're getting out. So we're selling. Once it's going down to 46,900, that's 1. That's 1 and 1. 46,800, that's a 1 and 2. 46,700, that's a 1 and 3. But don't forget the 46,750, because that is a zone. So yeah, it's kind of all I got right now for this video. You know, I kind of was fussing at y'all, you hear me, but just gotta get it in. You feel me, man? I hope I stay blessed. I hope this video show you some things that you need to know. And yeah, let's get to it. Bam.